Okay, welcome to the first masterclass session here, English version. I'm here with my buddy Power, and we are going to discuss some basics of the trading here on TradingView, on wave analysis, and a very, very powerful things to all of you guys to get going. Okay, let's get started. The first things first. We have to create the back office, okay, let's say, or the, can you see my screen? Yeah, Power?
Yes, I can see your screen.
Okay. The first thing is the setup, you know, on TradingView. It's quite critical and quite important because a lot of guys are just doing like, you know, for example, if we have here, for example, another setup, you know, and then for example, it's a lot of lines, a lot of colors, and the appearance of the background is, for example, black, and all those lines, and then the guys just start to placing some waves and placing some fib levels, and this is already a mess, you know. You got the point, yeah. Then the first thing is we have to actually read the price correctly, okay. In order to that, we have to just right click under the platform, the TradingView guy, and then settings, and then just go for a white. And that's it. Just go for white, vertical lines, white, horizontal lines, white as well. You know, then we don't have anything on the background, okay? Maybe horizontal guys we can have it. But as you see, it's a lot of levels, and we don't really know which one is gonna count. You know, which one is the critical level. No, it's like placing support or resistance everywhere, and this is quite a mess. Yeah. Then it's better to have clean. Okay. Regarding the candles, it's very important that we can see the body of the candle and the outline here in settings. We have to go to symbols and then just place it borders and wicks, everything black. And then we have, you know, the borders and the wicks, that it's the lines. Then we have it very, very nice, very nicely. The bodies, I'm using, you know, the blue. Some guys are using green, okay, or this green maybe, but green and red, I don't like it too much right now. Then I'm going for the dark blue, okay, and then the red. Here's Efa also joining the sessions. Power. Okay, great. That sounds good. Then
yeah, Efa is joining.
Okay, perfect. That sounds great. Then we have here the first thing, okay. Then, second one is just starting to add some pairs. This is another critical point in Forex because we have a lot of pairs. You know, we have 8 majors. That is the euro in the Eurozone, or maybe we can start in America now. We have the dollar, we have the Canadian dollar, and then in Europe we have the euro dollar or the euro. We have the pound, and we have the Swiss francs. Then we already have 5, okay? Then we have the Oceanic or the Asian currency. And then we have the Aussie dollar, Australian dollar, yeah? We have the Kiwi dollar, that is the New Zealand dollar, and we have the Japanese yen. Then we have 8 major pairs, yeah? Those 8 major pairs, if we just mescled it together, give us a lot of pairs, okay? Then the majors are those that are with the dollar, okay? For example, euro dollar, pound dollar, and this dollar pairs. Then we have the crosses of the minor pairs, that is they don't have the dollar, no? For example, the pound OG, or for example, the pound yen, or for example, CAD yen. You know, it's like a mix of two different pairs, but it's not containing the dollar in itself, okay? It doesn't mean that those pairs don't move. Those pairs move and move a lot, okay? Then what we can do, we have to do is just going for a small part of the currencies. For example, if you see here, I have the dollar index, okay? Then I have the gold, then I have the euro dollar, then I have the pound dollar, and then I have, for example, the USD CAD, quite nicely. And we have the Audi USD, and New Zealand USD, okay? These are like the main pairs. Like I have the pairs that I have in red, okay? This is like the better ones, okay? Or the most critical ones. It can be also the dollar yen. It could also be, okay? Then if we just see it like on a rel list, it looks like that. It looks very simple. Then we have small pairs. As soon as we get, for example, more confident about our trade, more confident about our analysis, and more confident about our decision making, we can extend to more pairs. Even we can also cut that for one pair or two pairs, and that's it. Okay, for example, you can trade, for example, the gold or the pound, and that's it. Just start with one pair, and then slowly continue to building up, because it's very easy to start opening positions and then having like a 10, 15 positions, everything open, and you don't know really what's going on, or what's the risk, or what's the risk reward of the trades, what do you get into the trade, what is the correlation within of the market, and this can be quite difficult and quite frustrating, okay? Then better start to one pair of this list, and then catching another one, and then maybe two, maybe three, and that's it, okay? Any questions still there, Power, maybe?
No, there's no question from here. We can go ahead.
Okay, perfect. Then.
Efa, do you have any questions?
No.
Okay, great. Okay, let's see if I can place here my camera, because I don't want to see this thing here. Okay, that's fine like that. Then, okay, as soon as we understand this thing, then we can do, or we can have, for example, let's see if I can have here plain analysis, but looks, maybe here in the dollar yen, yeah. Let's see if we have here. If I press here delete, it delayed all the analysis. Then I can close here. Then first things, the basics. Okay. Then at the start, we have all these tools here. Those tools are here on the left. Okay. And we can also just go in places like adding from favorites. Okay. We have the trend line. We have the horizontal line, horizontal ray, vertical line. Maybe that's not necessary, but I'm using it, okay? The arrow, the parallel channel, those things you have to just add it here to the favorites, and then it just add here. You see it? And then I have all the lines here. This is the Fib levels. I have a square. I have here a long and short position. And I have here the Elliott things, like a 1 till 5, ABC, ABCDE, WX, okay? This is complex combo. Then we have here like a call out, or something like that. This is just to price level, or to have some reference about the market. Here, just small arrow, okay? And then here's some you know, little things that make the analysis or make the thing a little bit better, okay? But the main things are the lines and the fib levels, okay? This is the main things. Then we can start using, for example, risk-reward ratios, and then we can start using, for example, the Elliott wave things. It's at the end, okay? Then, to begin with, we have to place, for example, the X point or the first start of the market, okay? Usually we mark it as red because it's like an invalid point or just a point of reference, okay? Then we have here this point, we will call it the X point, is where the market started, okay? In the market, the first thing that we have to learn is that we have impulse waves and we have corrective waves or corrective moves, okay? We want to go into direction of the impulse, okay? We don't want to be shorting here, okay, or selling here, because the market will just retrace and continue to the upside, okay? And create like a bull flag here, or for example, a continuation of the pattern, okay? A continuation of the impulse, okay? This is the impulse, this is the correction here, and this is the continuation to the impulse, okay? Like a 1, 2, and 3. This is the easy part, okay? Then as soon as we understand this, we will go only in the direction to the market or in the direction of the trend, okay? This is a lot of variations in the market because it can be trends between the corrections and correction between the trends. And then, well, it's a little bit complex there, but it's better to have it as easy as we can, okay? Then we have the impulse, and this can be, for example, the first wave, okay? Then we have the second, and we start, and then we go for the third, fourth, and the fifth. Then the first wave is an impulse, okay? We don't want to be going long here, okay? We always want to buy the retracement. This is the first rule, okay? We don't want to be chasing the market here, buying here, and all the stuff, okay? Emotional trading, impatience trading, okay? Because you don't have any risk-reward ratios here. You will buy here, the market will go up a little bit, then you will be comfortable between the trade, and then the market just retrace. And then the market just starts going up again, and you just get stop out, okay? Then we have to just wait for the correction, for this correction to happen. Normally, you don't think that this correction is gonna happen. It's gonna develop. You see the market here, for example, very upside. You see, no, there is no way that the market retraces till here. And yes, there is a way that the market can retrace, and always the market does, okay? Don't stop believing that, okay? Then, what I'm here is using the fib retracement. That is this beautiful tool. We have to do it from left to the right, okay? From left to the right, okay? And then we have it like this. Then, what are the levels that we are going to looking for? We are going to looking for the 50 level, that I don't have it here. I don't know why. Let's have it here, 0.5. 50 level, 62 level, 70 level, and 79 level, okay? All, of course, the 0 and the 1, okay? This is like a very practical tool because it can help us create a retracement of any move, okay? Then, if the market goes up, we wanted to go long here between 70 and 79. Write this down. Okay, this is a rule into the system. okay? Just write this down. 70 and 79. This is the retracement, and this is the gold area, or this is the sun area that the market will start to picking up and reaching some volume, okay? The market can go here, maybe it can touch the 50, go up, and then go down again, okay, for the 70, and then just start to move it up like crazy. If the market don't generate the move itself or the big move, we can also put some buys here, or we can also have some small trades here, okay? Just this level acting as a bull zone, okay? Or a support zone, okay? Then, first things first, we have identify first. Identify X point. What is the X point, guys? Question mark. Identify X point. Then, second, what is the X point? A question. Power, you there?
X point is the beginning of the impulse.
Hey, hello, Eva. How are you? Yeah, it's the beginning of the impulse. Exactly. It's the start point. Okay, is that where the bulls start coming in? Okay, is where you begin to see the change in the trend. Okay, we don't want to be buying here. It's quite risky because we don't really know the low. Okay, the market can just continue to go down. Thanks for the chat, Eva. Okay, then second wave. Second, in the step-by-step process, because we want to have as organized as it can. Okay, the second point is waiting for the first wave. Yeah, for the first wave. Yeah, what is the first wave? Is the maximum? Okay, it's the top. Waiting for the top of the first wave, okay? We have to waiting for the top, because as soon as we have the top, we already have the X and we have the 1, okay? And then we can measure this beast here, okay? We can measure this beast. The market is already gone. If the market is here, it's already gone. There's nothing to do there. Just waiting for your setup, waiting for the market to come to you, okay? Don't go below the before the market, okay? You will, this is like a chase in the market, yeah? Then the third point is place a retracement, yeah? Retracement, yeah? Place a retracement for, is look for 0.70 and 0.79% of the retracement, something like that. Retracement, yes. Okay. 70 and 79% of the retracement. Okay, great. Thank you very much. Sounds nice. Okay, then we have the rules here. It's getting nicely here. You see, the first thing is just easy, but you start to complex again. It's a lot of steps that we have to be aware of. Okay. Then here, the critical point is to learn how to enter here into the market, because we don't want to be placing only the trade here, because this is the Forex market. In any market, the market can just go here, stop you out, and then just move to the upside. Then how we can just enter into the market in the good area or in the perfect area, okay? Well, it's not perfect into the market, but But the thing here is just to wait for 3-bar a continuation pattern. The continuation pattern is very simple. We have bull candle, bear candle, we have bull candle, we have a bull candle here, then we have another bear candle, and then we will have the very big bull candle. Then, of course, this candle has some wicks, yeah? Just pay attention, it will be clear in a moment, okay?
Okay.
Okay, then here it's very important to wait. This area here is what we are looking for to happen here in the zone, okay? In the zone that we have just previously, detected, okay? In the 70 and 79, we have to wait for a bull pattern confirmation, a bull candle pattern, okay? Can be also something like that, like. Okay, what is this bull candle? It has to have a green candle or a bull candle, and on the top of the bull candle, we place it a vertical line, and this line is a blue line. This line is a enter into the market line. It's a confirmation of the past highs breakout, okay? Then the pattern will look like that. Just go down, does go down. It goes up a little bit. That is this point. It goes down again. That is this low here, okay? And then as soon as the market breaks the top here, we wanted to place a buy stop here in this case, okay? It's buy stop order, okay? Here, if the market continue down, you can't be feel it, You are not into the market. Then the market just go here, make the first wave or make the first try to just change the trend, and then go down again, and then we're gonna place like the buy stop around here, okay? Not into the fib level, okay? At least at the beginning, okay? Then if the market just continue up, we have the pending order here. What is a pending order? It's an order that you just place a certain price into the market. For example, in this case, it's 108956. We can place the order here, okay? It's a higher price. It's like a more expensive price, okay? But it's better to enter when the market starts to break the previous highs. For example, we have another previous high here. You see it? This can be another trade here as well. Then we have here one, okay? If the market just start to go up and break this previous high, of course, the market will retrace a little bit and all the stuff, but it's already gone, It's just a pullback because the market is changing the structure. It's changing, for example, also the trend here, okay? And here. Sorry, well, it's a lot of lines here, but hope you get the point, okay? I will delete a little lines, extra lines. See here. Are you hear me well, guys?
Yeah, I can hear you loud and clear.
Okay, perfect. Sometimes it's too loud. Okay, then we got the point. This thing, at the beginning, you will not be clear at 100%. And then if you are a genius, okay? These things we have to practice a lot, okay? Then as soon as we have the breakout, we have the third wave, the fourth, and the five. This will be in the next sessions, okay? The first thing is this thing, okay? Then, first step, identify the X point. Okay, good, great. Second point, waiting for the top of the first wave. Okay, we have here the top, okay. Third, place a retracement from X to 1, from left to the right, always, okay? Then, 4, look for 0.70 and 0.79 of the retracement. Okay, perfect. And then waiting for more patience, you know? This is all waiting. Wait for the bull setup to develop. Okay, that is this pattern. This is the bull setup. Okay, this is the pattern here. Okay, then it's already gone. Then we have to do it like 6. Where to stop, where to place the stop, where to place the take profit. Okay, okay, then risk reward will be minimum 1.5%. No, 1.5 risk reward. Okay, risk reward will be minimum 1.5 risk reward. What does it mean? If we are risking 10 pips, we are going for 15 pips. If we are risking 20 pips, we are going for 55, I think so. 20, 35. Okay, we are risking 20, we are going for 35 or 33, something like that. Okay, then the magic of this tool is that we have the risk reward. You see it here, 2.26, and then we have here 1.5 here, 1.5. Okay, you see it 1.5 here. This is the risk reward ratio. Okay, we have it here on style. I just always place it on compact, you know. But you see it here, risk reward ratio. Okay. Then if you place it compact, it will just say you the number. Okay. Then already it gave us a good risk reward, because sometimes we have to take from the very beginning to the very end the best trade or the best trade possible, you know. But this is not possible. This is not the real thing. Okay, in a day-to-day trading, you have to go for the risk reward and take it, and then if the market retraces a little bit and give you another opportunity, then take the other trade. Okay, or you can, in this, once you start to having some, for example, some confidence, and you start to closing days in profit, weeks in profits, and maybe 1 or 2 months in profit, you can start to just, okay, using like a 3-to-1 risk reward, okay, something like that. But this kind of trades are more complex. You have to be more patient. You have to be, for example, more having more clear in your analysis. Okay. This is already a good thing. If you are closing a trade with 1.5 risk to reward, you're doing great. It doesn't matter that the market here explode another 100 or 200 pips, okay? You got the point, yeah? Then you're looking what you can control. We can't control the market, okay? But we can control where to enter, where to go out, okay? Where to place or stop and all the stuff, okay? Good, great. Another important thing here is the fib levels, okay? We just have it. As soon as we place the retracement, right click, settings, and then we just place it here, okay? You can place as the same as I have, okay? This is very important, because if you don't have the same things, then it's quite complicated to do the same analysis, yeah?
Paul, can we have these settings for?
Yeah, sure. You can have it a screenshot right now, or I can give you the session.
The record.
Session, you know, you will have the recorded session power. Okay. Then we can also,
okay,
you know, You can have a screenshot right now, and then if not, I will have, for example, or it's even better to just have here some screenshots. I will take it right now. Okay, then we have the retracement.
I'm taking the screenshots.
Yeah.
The recording will also help.
Just take it, buddy. Just take it. I will take it here, for example, retracement here. And we have here is also very important, the setup, you know, the rules. Then we have here the rules. Okay. It's quite nice, man. Because it's already, if we are following the rules, we are going to do great. If we're not following the rules, we are just, you know, like looking for luck or something like that. Yeah. Okay. Then we will go into the lot sizes and all the stuff, but this is the beginning. Okay. And then I have here, let's see how it goes. Yeah, it looks perfect. Okay. I will hold it. I will send it to you as well. Then right now is just a matter to practice. Okay, just a matter to practice. Then we can have, for example, X point. Yeah, we can look for the X point. H4 here. Look at that. Look at that. We have a big impulse. You see this impulse here? We have the low here. This is the low. Okay? This is the X. This is already the X. And you can just do the work in the pairs, in all those pairs. H4, H1, it doesn't matter the time frame. Okay? The important thing is to practice. Okay, to make 2, 3, 4, 5 analysis, half an hour or 1 hour a day. You have to do it, guys. You have to do it. If you are not spending like 30 minutes a day looking at the charts or looking at the market, better to do another thing, you know. Then we have first thing we have the first wave here. You see it? This is a small one. Okay, this is small impulse. This is small impulse here. This is the first one, okay? We see that it retraces, you know, the market just started going up. I will place it into H1. It's very easy here. You see it? Very easy. The market just make the first move, and we just place the retracement, and we just mark this on. As soon as the market reach this area, we can start looking for the pattern, okay? Only as soon as we touch the area. If it touch the 50, it's good as well, but not as good as if it touch the 70 or 79, okay? Of course, sometimes it will be like that, you know, like 2, 3 pips, okay? This come like as valid, okay? Then, what is the pattern? We have to wait for a big move to the upside or just a move to the upside, then a move down, and into the top of this high is the buy. You get the point? Only above here. Maybe the trade just get filled here. You see it? It's like a small double top here. The trade gets filled here. Or if not, get filled here. Without doubt. You see how the market break here? You see it? Okay, it just broke, you know, it just boom, retracement, and then just continue. You see it? Then start to go up, then start to going down, and then we can place the buy stop here. Then the order can be something like that. Okay, above this high. If the market continue to go down, 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 and then continue down, your order get not filled. Okay, it will looks in real time like this. You see it? Market start to going up. You place the buy stop above here, only above here. Okay, because we don't have It's downtrend. You see it? It's downtrend. We don't know if the market will continue down. Okay? Then only above the price, and then you can have. The stop loss can be below the low before or below X. Okay? You have two stop losses here. This is more risky one because it's more close. You know, the market can also retrace here and touch again. Okay, but it's better to place it here below the X and then just go for the 1 to 5 risk reward. 1 to 5, 1 to 5 is here. You see 1 to 5 is there. Then you get out. If you get out and the market just continue, you cannot, you know, complain yourself and look for, you know, oh, how bad you are. You know, this is great. You're doing money, man. Okay. If the market continue, okay, just wait for another opportunity. What else we have? We have the next minimum and we have the next maximum. Okay, okay, buddy. You see the impulse and then comes the correction, okay? And we have another 70 and another 78 here. And we start looking for a bull and going down. In here, you see, you start to looking for the pattern. Here is a buy. You get the point, guys? Touch the point.
Yeah, sure.
We cannot buy here. Okay, we have to just wait here to the market to retrace in order to place the order here. Okay, at the beginning, I will recommend you to use, for example, a demo account and in the with the money that you can invest more later. For example, this is $500. Then open a demo account with 500. Take it there. Take it seriously. Treat it like real money, even if it's not. Okay, but it's like a preparation to open the account. If you want to invest 1,000 or 500,000 or whatever, just open the demo and do it like if it's real for 1 month. And I think, or 2 months, and I think this can be, if the results start to coming in, you can just open your real account. If the results is not coming in and you're doing the things good, then it's nothing to do, okay? But you have to follow the rules and you have to stay with the rules and not oversizing and not over trading, and well, there's a lot of things could coming on, okay? Then we have another low here, okay? We have another low, you see it? And we had another high, and you just, sorry, and you can just continue and do it this in your preparation. You see how magical this level is? You see how magical this level is? Everyone is getting short here, you see it? Everyone is coming short here. Short, 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 boom, okay? 70, 79. This is a buy here, buy, buy, buy. Here, you see the pattern? Goes down, goes up, goes down, and then broke the previous high. Goes down, goes up, more buys. You see the buys here? You see the buys here? Okay? And this is all confirmation levels, okay? Then I want, let's finish today like this. But if you see the chart, you see a lot of work there already. You see it? This is what that I would like to see in your charts, guys. Okay? Questions?
Well, it's you know, it's clear. It's not, for me, it's clear. It's, you know, it's just like something we already know, but it just like kind of refresh our course. So like we already get that concept, but not the most important point. Like kind of learn here is the bull candle, identifying those bull candle. You know, when is the right times to actually take the trade. Just within the wave, like we have the bull candle, you know, come down and, you know,
The very important thing is the pattern of course, but also if you take into account the zone, it will be great because you're waiting for a good area or probability area to waiting for the pattern here. Because if you're waiting for the pattern everywhere, you will see it everywhere, okay? Then we have to see the bull candle and we have to see the pattern into the area, okay? Into the liquidation zone. That's what I'm calling, okay? Into this area, okay? As soon as we saw the volume coming up, the guys coming in, okay, the market start to move, we can, okay, this is a good area and we have a pattern, we have two confirmation, we can go in. Because if we only use Fibonacci, this not works. And if you just use the pattern or a bull candle, you will see bull candles everywhere, okay? Then we have to combine the two in order to have more probability setups, okay? Even on the short side, okay, we can do, for example, a retracement here from low to the high. And here we have 79 and 70. You see it, 79 and 70 here. We are going here short, okay, because the market is already upside, okay. You see the zone where the system is giving us, for example, the short side, but we don't want to be short in here. We want to be shorting below here, below the red candles. You see it? Then if the market just continue up, you are not into the market. As soon as the market just go, it would enter off the trades here. You see it? Clever.
Yeah, it's kind of, you know, clear. So like, we're going to practice this. We'll be practicing this. So, you know,
yeah, the thing right now here, because I have to close here the Zoom right now for the recording, and I will send you another link, Power, okay? Then we get here, and then we can discuss some questions, okay? Then we already have the recording here, and I will send you a new link, okay?
okay.